हेलो एवरीवन, वेलकम टू यू ऑल अगेन टू दिस प्लेटफॉर्म जिसमें हम लोग डिस्कस करने जा रहे हैं गोल्ड मार्केट के मूव के बारे में। डिस्कस करने से पहले एक बार कंफर्म करना चाहेंगे आप लोग को आवाज और स्क्रीन क्लियर विजिबल और ऑडिबल है। इफ यस, काइंडली प्रेस पुट इन द चैट बॉक्स। देख सकते हो गोल्ड का मूव। 1772 के लेवल्स पे वापस से आते हुए एक शॉर्ट रेड कैंडल फॉर्मेशन के साथ 3 मिनट बाद इस कैंडल की क्लोजिंग का टाइम 1772.5957 के लेवल्स पे प्राइसेस मूव करते हुए देखने को मिल रहा है। थोड़ी सी करेक्शन। 1773.07 के लेवल्स पे एक मिनट बाद इस कैंडल की क्लोजिंग का टाइम है। देखते हैं कैंडल की क्लोजिंग किस डायरेक्शन में देखने को मिलती है और नेक्स्ट कैंडल किस साइड ओपन होती हुई दिखती है। सो इट्स 8:45 और हमारी दूसरी कैंडल फॉर्मेशन ये भी करेक्शन के साथ 1771.9798 के लेवल्स पे मूवमेंट दिखाते हुए थोड़ी सी स्लाइड करेक्शन। सो प्राइसेस स्लाइट मूव वापस से करेक्शन की ओर और हम लोग आ जाते हैं अपने न्यूज़ सेक्शन की ओर। So gold holding above 11,780. After last Friday's move, gold has rallied from a very thick zone 1745 to 60 towards the top of last week's range while still trading inside of a very steep bearish structure. The DXY is bearish at the moment, and that should bring more bullish pressure in the gold, more so if it's holding above last week's range high. The next key level that could keep the upside in the gold at it is last Thursday's low, which could keep gold trading inside of the bearish structure. हम लोग आ जाते हैं गोल्ड न्यूज फ्यूचर्स पे, बट उसके पहले हम लोग आ जाते हैं कुछ डिस्कशन पॉइंट्स को डिस्कस करने। So gold will outperform cryptos as an inflation hedge. Points to be discussed today. Gold is undervalued. Goldilocks scenario. Bank sees gold hitting as high. Gold may be a good strategic purchase. Overall outlook for gold is still strong. The gold price going forward. Data is according to 6 July 2021, 5 and 10 and August 2021. So gold is undervalued. Gold is undervalued and has up to 38% potential upside if the economy slows. Goldman Sachs said in its note. The bank experts gold to serve as a better inflation hedge than cryptocurrencies, the note said. Overall, we see cryptos still far from becoming a defensive long-term store of value like gold. Goldilocks scenario. So at about 1800 per ounce, the current price of gold is pricing in a Goldilocks of moderate inflation and a continued global economic recovery from the COVID-19 pandemic. But if inflation sees a higher than expected surge or if the global economic recovery falters, there is significant upside to the price of gold, according to Goldman. So, in a scenario where the global economic recovery doesn't play out as expected, or inflation begins to move materially above expectations,
मैं वचन देता हूँ कि इस क्लास में चौक की कमी नहीं होने दूंगा।
we see material upside to gold given its undervaluation and low allocation from the investment community, Goldman said. Bank sees gold hitting as high, so the bank sees gold hitting as high as $2,500, representing 38% upside potential from current levels in event that US investors allocation to gold yet ETFs rises to its 2011 peak of 0.7% of their portfolio. Given the significant upside, Goldman views gold as a good strategic purchase for investment managers that want to hedge against tail risk. The potential upside in the gold, so adding to the potential upside in gold is if the Fed underreacts to rising inflation and slowing global economy. This scenario would drive investors to more defensive assets, according to Goldman. In our view, this implies gold can outperform cryptocurrencies, which we view as more risk on inflation hedges. Goldman only sees gold hitting. Overall, we see crypto still far from becoming a defensive long term store of value like gold. But if the global economic recovery continues to hum along and inflation remains moderate, Goldman only sees gold hitting $2000, representing potential upside of 10% from the current levels. The price of gold is down 4% year to date. That's why because of COVID-19 जिसकी वजह से हम लोग को वापस से मार्केट एक बार ईयर टू डेट में करेक्ट होती हुई देखने को मिल रही है. Gold may be a good strategic purchase, so ultimately a number of uncertainties are still hanging over the global economy. Therefore, gold may be a good strategic purchase for portfolio managers looking to hedge against tail risk of macro volatility. XAU USD to gain bullish traction on a break above 1834. So gold is holding steady just above the 1791.45 of 1790.85 mid to late July lows. Axel Rudolph, senior FICC technical analyst at Commerce Bank, maintains a bullish bias as the yellow metal remains above the 2019 to 21 upper trend line at 1752 but warrants some caution. XAU USD sidelines near term above 1791.45, so gold really needs to overcome the 1834.16 mid July high to regenerate upside interest, and at current levels we are relatively neutral. The daily Elliott wave could remain negative and below 1790 W. So I'll target the 1752 2019 to 2021 uptrend line, while above there will be retain our long term upside bias. However, the lack of a sustained bounce in worrying. XAU USD sidelines near term above 1791.45. So above 1834.16 lies the 1857.25. The 4th June low. This cuts the June high at 1916.91 and Fibonacci at 1921. Longer term, we still target the 1959 to 65 November 2020 high and the 2021 high, and this guards the 1989 1978.6% retracement and the 2072-2020 peak. The 78.6% retracement lies at 1728.90, and only below here we will target the 1677.73, 1676.80 low seen in March. So gold price dropped. So gold price dropped, but these experts reckon the longer term outlook is still strong. The spot gold price dropped to US dollar 1733.86 an ounce yesterday. That's a drop of around $30 an ounce or 1.70 after the US reported a strong labor force figures. डिस्कस करेंगे ओवरऑल आउटलुक फॉर गोल्ड इज स्टिल स्ट्रांग बट उसके पहले एक बार MT4 टर्मिनल पे आएंगे और 2 मिनट का ब्रेक लेंगे क्योंकि हम लोग सिस्टम इज अबाउट टू डाई एंड वी हैव टू चार्ज इट जस्ट 2 मिनट का ब्रेक लेंगे उसके बाद हम लोग डिस्कस करेंगे बाकी की चीजें ओके सो गोल्ड का मूव देखते हैं स्टिल करेक्शन के साथ 1771.45 के लेवल्स पे मोमेंट के साथ फिलहाल सो मूव करते हैं अपने डिस्कशन पॉइंट की ओर वापस से बट वी विल वेट फॉर 1 मिनट क्योंकि 1 मिनट बाद हमारी दूसरी 15 मिनट कैंडल ओपनिंग का टाइम है 1771.77 के लेवल्स पे प्राइसेस मूव करते हुए फिलहाल ओके सो एक दूसरी 15 मिनट कैंडल फॉर्मेशन 1771.1819 के लेवल्स पे मूव करते हुए पूरी तरीके से मार्केट स्टेबल होती हुई दिख रही 1771 1772 के लेवल्स पे सो हम लोग मूव करते हैं अपने डिस्कशन पॉइंट्स की ओर. So overall outlook for gold is still strong. So but the overall outlook for the gold is still strong according to the main life founding director and senior research analyst Graven Vendit, who said that the catalyst for the mid-cycle correction is already ancient history. My fundamental view on the gold is that the outlook is still robust, it is still strong, and the reason is that we have debt levels that are extraordinarily high in the world's major economies. That debt has to be serviced, and that level of debt is growing, he said. The near term correction in the gold price. So at the same price, at the same time, we have got uncertainties with respect to the impact of COVID variants on the world economy and the US economy in particular. And whilst we have seen a strong labor force figures, which seems to have been the catalyst for the near term correction in the gold price, that's effectively ancient history. The near term correction in the gold price, we are charging forwards, and with the infrastructure and spending that's going to come by Biden economically, everything's going to be great. So, why we need gold? But in the current environment and sort of economic data, particularly in the age of COVID, is extremely volatile. It can move around and it can correct itself very quickly. The outlook for the gold price, if you look at things like yields in the United States, they are at a record low level. They are negative now, and to me that is the very strong indicator, that a very positive fact in the terms of the outlook for the gold price. One of the things we are also looking at in the United States is interest rate, which are pretty close to historical lows. Positive catalyst for gold price. At the same time, we have got inflation, and that means that interest rate in the United States are negative. Once interest rate in the US are below at the level of inflation, that's negative real interest rates. And typically, when interest rates are negative like that, it is a very positive catalyst for the gold price. So the gold price going forward, when that predict that the interest rate will stay low and the US dollar will stay low, which provide a fundamentally good environment for the gold price looking forward. Markets will always look at these bits of economic data as a justification for a positive outlook, but beneath all of that, I think there is still a very, very strong argument for the gold. आ जाते हैं अपने MT4 टर्मिनल पे मूव देखने, तो प्राइजेस करेक्शन के साथ 1770 के लेवल्स पे. देख सकते हैं दोस्त, हमारी ये कैंडल पूरी तरीके से करेक्शन की हुई 1770.2029 के लेवल्स पे पूरी तरीके से करेक्शन दिखाती हुई। 1769.96 तक के लेवल्स पे। 4 मिनट बाद इस कैंडल की क्लोजिंग का टाइम देखेंगे, नेक्स्ट कैंडल की डायरेक्शन किस साइड है और उसका मूव किस तरीके से देखने को मिल रहा है। 1770.3641 के लेवल्स। देख सकते हैं मार्केट पूरी तरीके से स्टेबल होती हुई 1770.5249 के लेवल्स पे। देख सकते हैं 9:15 का टाइम और दूसरी कैंडल फॉर्मेशन के साथ। सो हम लोग आ जाते हैं अपने न्यूज़ सेक्शन पे और हम लोग डिस्कस करते हैं गोल्ड न्यूज़ reuters डॉट कॉम। So precious gold rises 1% as weaker dollar lifts appeal. So silver hits over 1 month high. US dollar tumbles to 3 week lows. Palladium jumps over 3%. Gold prices rose as much as 1.2% on Tuesday after two straight sessions of declines as the dollar weakened and bolstered the appeal of precious metal as cushion against inflation. Spot gold was up 0.5% to $1772.61 per ounce by 10:24 a.m. EDT after climbing to 1784.85 earlier. So spot gold was up 0.5% to $1772.61 by 10:24 a.m. EDT after climbing to 1784.85 earlier. US gold future gained 0.7% to $1777.20. The dollar, whose recent strength has pursued gold, was hit by growing rate hikes but in other markets. The dollar, whose recent strength has pressured gold, was hit by growing rate hikes but in other markets, lifting bullion's appeal for holders of other currencies. The strength in the dollar has been a whole big golden check for as for late, and today the weakening dollar is offering support to the gold market. In addition to that, we still believe that inflationary pressures are a driving force for both gold and silver. Spot silver rose 3.4% to $23.94 per ounce, scaling a more than 1 month high. Market participants are increasingly expecting the US Federal Reserve to start tapering asset purchases sooner after the recent data showed a solid increase in the US consumer prices. Reduced stimulus and interest rate hike tend to drive up government bond yields, raising non-yielding bullion's opportunity cost. Meanwhile, US benchmark 10-year to US Treasury bond yields held firmer above 1.6%. Among other precious metals, platinum climbed 0.5% to $1040.87, and palladium jumped 3.6% to $2088.17. Along with platinum and palladium likely being helped by short covering, there is some expectation that the cheap shortage has potentially peaked, and if data flow shows that the case, we should get some improvement on the car production side. 74 टर्मिनल पे वापस से आते प्राइसेस स्टेबिलिटी के साथ, और हम लोग आ जाते हैं एक छोटी सी क्लिप देखने. गोल्डन स्किटको की हम लोग एक छोटी सी क्लिप देखेंगे.
We're talking all things silver today with Steve Penny. He is the publisher of the Silver Chartist Report. Steve, welcome to the show.
You bet, David. Thank you so much. I've been following you guys for a long time. First time guest, but a long time listener. So it's a pleasure to speak with you today. Thank you.
That's amazing. Thank you for being here. And I followed you on Twitter. You've got some amazing posts. And we'll be talking about some of your research today. Focusing on silver, I know you cover the uranium and gold markets as well, but today primarily we'll be talking about silver and your outlook for the metal. Silver has had a rough year, to say the least. A lot of people expected it to go higher for a variety of reasons. One of the interesting things I've noticed this year, well, myself and other analysts I've spoken to is that silver has diverged from the gold price. Historically, they've moved in tandem. Silver has had a higher beta to gold, but this year, for some reason, if you look at the two variables next to each other, they don't seem to be moving in the same direction all the time. Why is that?
Well, I would not necessarily agree with that over the long term. You could certainly, that's certainly a true statement over the last few months. But if you look at the gold to silver ratio, something I track very closely, going back to March of 2020, that ratio had reached an extreme that's never been seen before, about 130 to 1. And then very quickly, that ratio compressed down to about 65 to 1 in August of last year. So that ratio had moved really far, really fast. So I think what we're seeing here is just kind of a little bit of a backing and filling in that ratio, where we said last I checked somewhere around 75 to 1 or so. But I do think that silver will continue to move in the same direction as gold and outperform gold as the bull market resumes.
Okay, and let's talk about the gold-silver ratio now. So, as you said, historic levels, never before seen before. We've come back down since 120, 130. Historically, it's hovered around, I would say, 50. Now we're still higher than that. What's your outlook for the gold-silver ratio? Where should it be according to your analysis?
Sure. Well, there's a couple of answers to that. You can look at mining output, and roughly it's roughly a 9 to 1 ratio, where silver is pulled out of the ground roughly 9 times in greater abundance than gold. So that's one ratio you could look at. You could look at a long-term historical ratio, and that's roughly 15 to 1. And 15 to 1 is interesting to me because that's typically where bull markets peak. So back in 1980, at the peak of that bull run, the price of gold was roughly 15 times that of silver. So I think in the fullness of time, in the next few years, we're very likely to see that ratio revisited 15 to 1. Of course, that's going to take some time because we're sitting at roughly 75 to 1 now. But that would mean that silver outperforms gold by roughly a factor of 5 over the next few years. And I think that's a very logical path forward.
A decline of the gold-silver ratio down to 15 to 1 could imply one of two things. Either silver skyrockets to the moon or gold collapses. Which is more likely?
Well, I don't think gold is going to collapse. I think we've already seen most of the selling here. I'm not necessarily calling a bottom, but I think we're much closer to a bottom than a top in the metals. And like I said, I think silver is going to outperform going forward, but I also think gold will do very well.
Okay, and let's talk about the industrial component of silver. So let's circle back to the fundamentals now. What do you think are the core drivers right now?
Well, for the silver price, you mentioned industrial demand. That's a tailwind. Industrial uses for silver are only increasing, especially with electrical vehicles, solar panels, you name it. There's a lot of things, industrial uses for silver. But that's not my primary investment thesis, and that's the primary investment thesis is based on retail investment demand. If just a small number of general investors say, hey, I want to have exposure to just some silver, there's just not simply enough at today's prices. And historically, that's what drives, the kind of prices silver investors are looking for, north of $50. And
so
I think that is coming. We're just waiting for a catalyst.
Well, silver investors might be wondering, we've had a number of industrial catalysts this year, the infrastructure bill, the long-term greenification of our economy that requires silver in a lot of different applications, industrial applications. So why hasn't the silver price moved this year?
Well, like I said, the industrial demand, that's a tailwind. But what we need to really see the price move is more generalist investors come in, retail demand. And we just haven't quite seen that yet. We do have the Wall Street silver crowd, and there's a constant bid for silver, physical silver. But we're not seeing the generalist investors shift en masse. They're still into, what I call the bubble assets, general equities and things like that. But at some point, they're going to shift. Value investors are going to shift over towards silver. And that's when we're going to see the really explosive moves higher, in my opinion.
Well, we did see the silver squeeze earlier this year from the Wall Street silver crowd.
Right.
That wasn't enough, you're saying?
Well, it was enough, but it's still a smaller subset of the general investment crowd. Like, you're not seeing silver talked about on Fox Business or CNBC or anything like that. People are going they're chasing momentum. And right now that's in stocks, tech stocks, and other assets. But at some point, that's going to shift. And one metric I like to track is the Dow gold ratio and the Dow to silver ratio. And we need to see the metals start to outperform stocks. And as that starts to happen, that's going to attract a lot of those generalist investors to take their chips off the table in these overvalued assets and cycle into things like silver and uranium and gold.
Okay. Isn't that kind of a chicken and an egg problem now, Steve? I mean, these mainstream media outlets that you mentioned, Fox Business, CNN, CNBC, they're not going to talk about silver or gold for that matter until the price moves. I remember mainstream coverage of gold. It hit a peak last summer when gold also, no pun intended, hit a peak.
Right.
But it doesn't seem like they were covering it before when there was no price action. So yes, we do need to see more mainstream adoption, but mainstream adoption is going to happen at these low volatility price environments. What do you think?
Yeah, that's true. And it's important to know, especially with silver, the price is set by supply and demand of paper contracts set on the commodities exchange, or the COMEX. And historically, the commitment of traders report is a good indicator, not necessarily of nailing the bottom, but of when a bottom is close. And what's interesting is that commitment of traders report in silver has greatly improved over this last few weeks. So we're seeing the banks starting to cover their short positions, and we see smart money posturing for or positioning for the next turn in silver. And I think that's going to be a big catalyst too when the banks start buying.
Why do the banks have short positions to begin with?
Well, that's a really good question. If you ask them, they'll say it's to hedge existing longs and for their clients. But I'm not one of these people who blames every downtick on manipulation. But I think there's a very good case to be made that silver is likely the most manipulated metal on the planet.
Mm-hmm. What do you mean by that? How is it being manipulated?
Well, on the COMEX, you can see that large sell orders come through at very illiquid times, and that's not the price. That's not the behavior of traders who would be looking to maximize profits.
Okay, so can you elaborate on that? They're doing what exactly?
So let's see. I'm trying to think of the most recent example. Like I said, I don't blame every downtick on manipulation.
I understand.
And I didn't intend to open up a can of worms, but if you go back, let's see, a few weeks ago, there was a really sharp sell-off in gold, something like $80, $90. I can't remember the exact date. And that happened at a very illiquid trading time. In the middle of the night before the New York traders are active. If you're a trader looking to get rid of your long positions, that's not how you would get rid of those. You would want to sell gradually into strength or into more liquid markets. That's just one example of how banks can potentially manipulate the paper price lower.
Well, Steve, I mean, that just speaks to the illiquidity of the silver market and the paper contracts and the COMEX altogether. I mean, isn't that the same argument as saying, well, a penny stock is being moved dramatically by, one seller selling a bunch of lots
Right.
overnight. But I mean, he may or may not necessarily be manipulating the market. He's just dumping his positions, right? But it's an illiquid market for that penny stock, and so therefore it's moved a lot.
Well, let's use that analogy. Let's say you owned a penny stock, you wanted to sell it, and it trades on very thin volume. I mean, are you going to try and sell that in off-market hours when there's no buyers there? No, you're going to scale out slowly in the most liquid hours. You're not just going to dump it all at once because you're not going to get the best price. And I think that's a great analogy for what we see in the silver market frequently.
Okay. So let's go back to the price now. So the price action we've seen over the last couple of months has been, if I can characterize it as being stale, I would use that word, but I'd like to get your opinion on how it's performed thus far according to your expectations as a silver analyst.
Yeah, and saying stale, I think that's putting it kindly. Let's just say it's been terrible. It's been just flat out ugly. I mean, if you told me back in August of 2020 that we'd be here in September of 2021 with a 21 handle in silver, most people wouldn't believe you. Almost everything is going up except for, silver and the things that should be going up in this environment. So it's extremely frustrating. And I sympathize with that. But, I'm a contrarian investor. And as a contrarian investor, I like this price action because it gives us time to accumulate. It gives our members a time to accumulate at much more favorable prices. And, if history is any guide, this is not going to last. Silver and gold have a long track record of thriving and prospering in this exact environment that we're seeing right now. Sure, there are still some short-term headwinds as the Fed continues to talk about taper, normalization of interest rates in 2022. Those are short-term headwinds, but from a longer, bigger-term or macro perspective, we know that's not sustainable. Silver and gold always do a full accounting for the expansion of debt-based fiat currency, and I don't think this time will be any different.
If I were new to the market, if I were not yet invested in silver, would you recommend me getting in right now, or do you think I should wait?
Oh, absolutely. I love that question, David, because a lot of people maybe learn about the silver space for the first time and their eyes are open. They realize that, stock market's a bubble, or they come to these conclusions and then they sell everything and pile all in. And I don't think that's a wise move. I think everyone needs to have a plan. And first of all, I think people should decide, hey, I'm new to this space. How much of my portfolio do I want to even allocate to this sector? That's the first question. And then from there, have a plan to accumulate. There's no right or wrong answer, but you could dollar cost average. You could simply wait for a technical reversal. There's nothing wrong with that. Or you could scale in on weakness. But having a plan is the most important thing. But I certainly wouldn't just, hey, I'm new to the sector, put all my money in right now. I don't think that's the wisest way to do it.
And so if I were to invest in silver right now, let's say, what are some of the instruments I could use? What would you recommend me do? Buy physical, buy the paper markets, buy ETFs?
Sure. Yeah, I love that question. So I'm a big advocate for owning physical metal stored outside of the banking system first. I like to say build your moat before your castle. I think of physical metals as my defense, and then the mining stocks as my offense. And there's different ways to invest in the mining sector. Some are a little bit more high risk, high reward, if you know what you're doing or you have some guidance. But a simple way to do is just to buy the ETF. That's for someone who doesn't want to do any due diligence on individual stocks. There's some okay ETFs out there, but a well-selected basket of individual mining stocks would outperform, in my opinion.
Okay, interesting. And again, if I were a generalist investor who has no experience in the silver market, I may say to you, Steve, I've just taken a look at the long-term chart of silver over the last 40 years or so, and it has not even breached its 1980 peaks yet. So, I mean, this long-term chart, I'm a long-term investor, I'll say to you, Steve, and this long-term chart doesn't really look appealing to me. What's going to be different this time? What's going to be different in this next 40-year cycle?
Yeah, so the person who says that this doesn't look appealing to me, as a contrarian, this does look appealing to me. You just made a really good point. Silver still hasn't even surpassed its 1980 high, and I think that's the only commodity on planet Earth that you can say that about. Silver reached about $50 in 1980, and here we are at 21. So not only are we not above that 1980 high, we're less than half. So, I mean, unless this is some kind of anomaly where this time is different, silver's got much more upside and very little downside compared to any other asset than I can think of.
Okay. Now let's talk about this $50 silver price. I'm going to give you a hypothetical scenario now. Okay. I'm going to say to you, Steve, we're talking about catalysts now. I'll say to you, Steve, next year, silver needs to go to $50. What would you say the catalyst has to be for $50 to happen in 1 year's time? So basically double in a year.
Okay. Well, picking catalysts is tough because there's a million potential catalysts out there and trying to nail it down to one. But here's one scenario that I think is likely. I try and avoid terms like using words like crash and collapse and things like that. But let's just say the stock market, I think, is due for a 20% pullback. A lot of people might call that a crash. I think if we saw a 20% pullback in the stock market, especially if it happened in a short period of time, that's going to get rid of any taper talk. They're going to stop talking about tightening interest rates over the in 2022, and they would probably reverse course and have more monetary stimulus. Just a 20% pullback in stock market. That could be a significant catalyst for the metals. So that's one potential scenario I'm looking at here over the intermediate term.
What's the relationship between monetary stimulus and the price of the metals?
Absolutely, yeah. Especially silver. Silver responds, has a direct correlation to Fed monetary policy. Easy Fed monetary policy typically results in uptrending prices for the metals. It's as simple as that.
Can you explain why? I mean, what's the connection here? So you've got a bunch of you've got the expansion of the money supply by the central banks. You've got presumably also a lowering of the interest rates because they need to lower interest rates. That's the mechanism with which they purchase bonds through the open markets. And so you've got more money supply, lower interest rates. How does that feed into higher silver prices?
Sure. So two answers to that. First, silver and gold, put simply, are money. They've been money for thousands of years. And when currency is debased, people look to preserve their purchasing power. And silver and gold have historically done that role. So when they're debasing the currency, that makes silver and gold an attractive alternative. And then second, you mentioned interest rates. A lot of people right now put their savings in the bank to earn an interest rate. Well, if the rate of inflation is higher than the interest you're getting by keeping your currency in a bank, well, you're losing purchasing power, which again makes silver and gold a more attractive alternative, especially to big investors.
Okay. I've heard an argument from another analyst talking about silver. Now, I'll just ask you to agree or disagree with this statement here. Now, he said that silver, like you said, used to be a form of money for many, many generations. Mm-hmm. It may no longer serve that purpose going forward because what silver has done in the past was it's basically provided smaller units of account for gold. Like if you wouldn't go to a baker and buy your bread with an ounce of gold with a small gold coin, but you might do that with silver coins, for example. So it was smaller units of account for gold. Now what we have gold blockchain. We have gold on. We have cryptos coming out based on gold. That has basically infinite divisibility, and so you can pay for your piece of bread using small fractions of that gold blockchain. And so the purpose of silver is no longer there in the future. How would you respond to that?
Yeah, you're about the fourth person to ask me that in the last handful of days, and I believe you're referring to Lobo Tigre. I actually had the pleasure to meet him in person this past weekend, and Lobo is someone I look up to a lot. He's an independent thinker, and I really respect his thoughts. I'm not willing to say I fully agree with that right now. I mean, the last several thousand years are filled with failed attempts to replace silver and gold as money, and nothing has been able to replace it yet. Now, could blockchain take some of the monetary use away from silver? That remains to be seen. But as far as the blockchain uses for gold, there's also plenty of blockchain applications coming to silver as well. So I think I'm not sure I'm willing to buy into that argument yet, though. I think it's a point worth considering. I respect Lobo's thoughts on that.
Let's close on your forecast for the silver price. So I gave you a hypothetical $50 scenario. Let's talk about your more realistic base case for where silver could end up by this year, the end of the year.
Okay, so realistic forecast for this year, I'm going to say $400. I'm just kidding. No, well, I like to say I deal in probabilities, not predictions. So I think we're very close to a bottom here. There still is some downside risk to potentially $18 or $19 silver. I'm not saying that's a probability, but it's a high enough probability that we should be mentally prepared for it. The big number to watch is $30. I think everyone knows that who's been watching the silver price for any length of time. Once we get above 30, I think we do get to $50 fairly quick, probably within a quarter or two, because there's not much resistance between $30 and $50 silver. So I'll say once we get through 30, I think 50 comes pretty quick. Probably not in 2021, but perhaps in the first half of 2022.
Yeah, I've heard that before. So you're basically giving a pretty tight range from now until the end of the year, which is fair. Do you think the probabilities are more highly weighted on the downside or the upside from here? We're at $22 today.
Yes. Yeah, I think downside risk is minimal relative to upside potential for anyone with a 1 to 3 year time horizon. Downside risk is minimal. If you've got a 1 to 3 year time horizon, I think we're squarely in the accumulation zone. Nailing the exact bottom is very difficult. I mean, very few, and nobody can do that consistently. But we can say, hey, we're getting close here. All the fundamentals, the technicals are all starting to line up that we're getting close to a bottom here. And I think this is a great time to start scaling in if you've got that risk tolerance and time horizon.
So more likely than not, we'll hover between the $22 and $30 range by the end of the year.
I think so, yeah. There's been a lot of technical damage inflicted over this past few weeks. So that's going to take a little bit of time to repair.
All right, Steve. Pleasure to have you on the show. Welcome to Kitco, and I look forward to speaking with you again. Thank you.
Thank you, sir. Really appreciate it.
And thank you for watching Kitco News. I'm David Lin. Don't forget to subscribe to our YouTube channel.
टर्मिनल की ओर तो देख सकते हैं प्राइसेस करेक्शन के साथ 1768 के लेवल्स बनाते हुए So देख सकते हैं 945 एंड प्राइजेस 1768 के लेवल्स पे मूव करते हुए. 1768 1767 के लेवल्स बनाते हुए प्राइजेस पूरी तरीके से करेक्शन के साथ. और हम लोग आ जाते हैं अपने डिस्कशन पॉइंट्स पे. So gold chart of the week. XUSD hit the 1800 target. So now what? Points to be discussed today. Gold historically strong performance. Gold struggle to capitalize. Gold has record low real rates. Gold price is likely to be caught in conflicting sentiment. Gold daily chart prior analysis. Gold live market update. So gold historically strong performance. So gold historically strong performance can be attributed to high inflation and market volatility supporting capital preservation motives. Lower real rates supporting both opportunity cost and growth risk motives. Gold struggle to capitalize. Gold struggled to capitalize on the previous day's modest bounce, instead met with some fresh supply on Wednesday and dropped back closer to the 1750 level heading into the European session. This marked the second successive day of a negative move and was sponsored by the continuous surge in the US Treasury, which tend to drive flows away from the non-yielding yellow metal. Gold has record low real rates, so gold hasn't benefited from record low real rates and high inflation in 2021. We believe this that has to do with rosy expectations about inflation, growth, and equities. Record low yield might constrain bonds hedging potential in a risk off event, offering gold an opportunity command to some of those if defensive flows should a shock to risk asset materialize. Gold is firming at a critical level of support on daily chart. Stagflation risks are being weighed as a driver for gold. Oil prices are parabolic and the supply chain disruption supports the bullish outlook for gold. Gold managed to attract some buying on the first day of a new week and recovered a part of Friday's rejection slide from the 100 200 days simple moving average confluence hurdle near the 1800 mark. Currently hovering around the 1770 to 71 region, a mixed performance around the equity markets were seen as a key factor that extended some support to the safe haven XEU USD. Currently hovering around 1770 to 71 region, a mixed performance around the equity markets was seen as a factor that extended some support to the safe haven XEU USD. The return of stagflation. So, data released earlier this Monday showed that Chinese economic growth decelerated sharply during the third quarter of 2021. This, along with worries about a faster than expected rise in inflation, fueled fears about the return of stagflation and weighed on investor sentiment. The non yielding gold, so the supporting factor to some extent, was offset by the prospects for an early policy tightening by the Fed. This was evident from the elevated US Treasury bond yield, which could act as a headwind for the non yielding gold. A modest dollar uptick. So, apart from this, a modest US dollar uptick might further collaborate towards the caping gains for the dollar denominated commodity. The combination of diverging forces warrants some caution for aggressive bullish traders and before positioning for any further appreciating move amid absent relevant US macro releases on Monday. The price of gold. So the price of gold on Friday plummeted following signs that the US economy may not be declining at a rate that could spark stagflation in 2022. Data at the end of the week was surprisingly strong in the US retail sales, which coupled with the strong earnings on the Wall Street, pressured on remaining bulls on day to crash and step aside. XEU USD fell from a high of 1796.49 to a low of 1764.86 on Friday. The price of gold, so at the open of the week, the price of gold is 0.1814% higher as bulls look to protect a strategic layer of support as illustrated below and trades near 1770. The high of the day so far has been 1772 and a low for 1764. Depending on Fed's rhetoric, the week ahead will have plenty of Federal Reserve speakers, and the Fed's Beach Book could give further insight into the breadth and depth of bottlenecks facing U.S. industry. Depending on the Fed's rhetoric, gold prices will likely be caught in conflicting sentiment with regard to inflation, stagflation, timing for tapering, and final liftoff. Gold chart of the week, XAU hit the 1800 target. Now what? So gold bull eye the September high near 1830 for the week ahead. 1770 is a key level that bulls need to overcome this week. Stagflation risk. Should underpin the precious metal. Gold daily chart. So gold prior 4-hour chart analysis from a 4-hour chart perspective, gold bulls would be prudent to see the price make a move in the direction of target to break the near term resistance around 1770. In engaging above this area, there is a higher probability of bullish continuation for gold this week. सो आ जाते हैं अपने MT4 टर्मिनल पे और प्राइसेस देख सकते हैं 1767.46 के लेवल्स पे पूरी तरीके से करेक्शन दिखाते हुए फिलहाल देख सकते हैं प्राइसेस 1767.93 के लेवल्स पे मूवमेंट के साथ ओके सो 10 बजे का टाइम एक और कैंडल फॉर्मेशन 1767 के लेवल्स पे इस पर लग रहा है क्लोजिंग हम लोग को डाउन होती हुई दिखेगी। देख सकते हैं प्राइसेस का मूव 1767 के आसपास। तो हमारी साइड से आज के लिए इतना ही। अगर आप लोग की साइड से कोई भी क्वेरी हो आप लोग कमेंट सेक्शन में मेंशन कर सकते हैं। हम लोगों ने बहुत सारी चीज़ें डिस्कस कर ली। अगर आप लोग की साइड से कोई भी क्वेरी हो तो आप लोग कमेंट सेक्शन में मेंशन कर सकते हैं। सो हम लोग आज का सेशन यहीं पे एंड करते हैं और बाकी की चीज़ें कल के सेशन में डिस्कस करेंगे कि मार्केट का आगे का मूव कैसा है और कैसे कैसे चेंजेस देखने को मिलेंगे। सो तब तक के लिए थैंक यू सो मच फॉर अटेंडिंग दिस सेशन एंड फॉर ज्वाइनिंग दिस।